Hello traders, good morning, good afternoon, good evening, bonjour, bonsoir mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW 24 traders. The title of this video is Trading FS Like a Pro, Tips and Tricks. Let's get started. For traders that are wondering where I went to, all right, what has happened, okay, we took some time off. Now we are back to normal again. Okay, so let's get started. Trading FX like a pro, tips and tricks. All right. Now, the first thing that I want trader to understand is that when a financial instrument, okay, is bullish, so we have a prior bullish move from A to B, and a price pullback, preferably, okay, not going below the 50% Fibonacci retracement level, all right, and a common central line is broken, this is a bullish setup, all right. On the other hand, when a financial instrument goes down for a long time, it's telling us that the bearish momentum is strong. You see here the Euro USD, pay attention carefully. The Euro USD went up from here all the way here, all right. What has happened here, you see it's all red candles. This is telling us that the bearish momentum is quite strong. Now, what has happened now? Now we have what we call a rally. So you see what I draw here? Price went down, okay, and then rally a little bit. If the common sense trend line, which is the red line that I draw here, is broken, and the candle closed below the common sense trend line, this is very, very important. The candle that is breaking the common sense trend line must close, all right, must close. If that candle is not closed below the common sense trend line, all right, do not assume that the trend will continue. Now, so price went down, okay, and then price rally. We will prefer that it doesn't go above the 50% Fibonacci retracement level or the 61.8% Fibonacci retracement level, all right. And then the common central line is broken, and the candle that is breaking the common central line must close. This is a bearish setup. So because the prior trend was very, very bearish, as you can see here, very, very bearish, all right. Now we have a rally, and now we have our common central line is broken. The common central line is a trend line that we draw very close to the price. And also, the candle, I'm going to color my common central line now into red, all right? Because I'm on the weekly chart for the Euro USD, all right? Okay, so my common central line is the red line. So price went down. You can see here it went down big time. It's very, very bearish. Now the common central line is broken, and this candle here must close below. The closing price must be below the common central line. You can see after this week, all right, this is what we call a bearish setup. So remember, the setup is not the signal. The setup is not the entry. As you can see, the following week, this candle here, the price went back up to retest the common central line before going down. So at this point in time, we know that, okay, the bearish momentum is quite strong, and a candle has closed below the common central line. We will now use what we call a top-down trading method or the trading drill. They set up on one particular time frame, preferably a higher time frame. Then we go to the signal time frame, waiting for the signal on the edge. Then we select a low-risk entry point on the lower time frame. All right? As always, we will not use the technical analysis alone, which means as a forex trader, trading like a pro, we will go to Forex Factory to check the economy news that are likely to affect the Euro USD. We are comparing the economy of the United States to the economy of the Eurozone. When we are talking about the Euro, we are indirectly also talking about China, because China is the biggest trade partner for the Eurozone. The market is global, ladies and gentlemen. Okay, so you see the setup now. Price went down strongly, telling us that the bearish momentum is strong. There is a rally, yes, second condition. Third condition, the common central line is broken. Fourth condition, a candle must close below the common central line. So if you're on the 2 hour chart, you're on the 4 hour chart, the 2 hours candle or the 4 hour candle must close below the common central line. Then you have a setup. Now you will not quickly place a trend. Now you will go to the signal time frame, okay, and then select a low risk entry point. If you are day trading using the TSCW24, once you find the setup, you will go to the first best time frame looking for, okay, entry point. That's all. But, you know, when a trend is about to start, sometimes there are fluctuations. Why? Because the hedge fund, the big institution, do not buy and go. So they take time to buy and they take time to sell. When they are taking time to buy, we call it accumulation, which means they don't buy at one point and go. So the price will be oscillating around that zone before going down. And they will try to sell at the highest price. That's why you see here the price will try to go up. Before the price goes down, the price will try to go up first because the smart money will always sell high. They want to sell, they want to buy. The price will also oscillate, which means it may go ups and down. So if you are day trading, do not be surprised. It may go up and down. You see blah, 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 blah. And then, okay, the trend will resume. But remember, if the smart money wants to buy, the price must go down. They want to buy low and sell high. Ladies and gentlemen, let's continue with our discussion about trading FS like a pro, tips and tricks. The first example that I was giving you, ladies and gentlemen, on this weekly chart, okay, I have talked about the downtrend when the price goes down and rally. The first example was a bullish trend, so the price went up, okay, and then a pullback. Preferably, we don't want it to go beyond the 50% or the 61.8% Fibonacci retracement zone. Now, so price went up, okay, price pulled back. And then the common central line is broken. That's the third condition. The fourth condition, a bullish candle must break, okay, this bearish trend line. Now we have a bullish setup. We will not, whether we are swing trading using the TSCW as usual or we are day trading, we will not enter the trend on a setup time frame. We will go now, okay, wait for a signal and then look a low risk entry point. But because we are not, okay, the purest technical traders, we will also check the fundamentals. This is very, very important if you are trading forex to know what is likely to mess up your trade, all right, or what is likely to support your trade. You want to analyze the market sentiment at that point in time. As you know, this week, okay, as I'm talking about it now, talking about economy news, why the forex trader must keep their eyes wide open, all right? So tomorrow is Friday, yes or no, okay? Friday, the 7th of November, 2014. The first week of the month for forex trader can be tricky. So what I recommend to new traders or traders that are struggling, you can take a 1 week off, okay? So the first week of the month, you can just walk away and come back later. Because of the high impact news here, the non-farm employment change, a very volatile economy news due tomorrow. So be aware of it at 8:30 a.m. Eastern Time. That's 1:30, okay, p.m. London time. So be aware of it. So all these red envelopes you can see here, there are economy news for Canada and also for United States here, all right? And also the first week of the month, I've told you also on Wednesday, okay, we have the ADP non-farm. Did you pay attention to that? Here it is, okay? It was a bullish forecast for which is the preliminary economy news for the non-farm employment change. Now the non-farm employment change, in fact, that is due on Friday, okay? Again, the speculators will try to play it here. It's a little bit bearish, but the ADP is forecasting bullish. But this is what I want you to understand, that when you are trading forex, you must understand the economy news and how to combine the technical trading and the fundamental. If you are trading forex and you don't want to be involved with the economy news and a volatile market, you may decide to trade stock or commodity, something else, all right? Whichever you are trading, you will have to check, okay, the economy news, okay? But for forex, you cannot hide from it. So the setup is very simple. Price went up, price pulled back, okay, preferably not going beyond the 50% or 61.8. Common central line is broken, and the price closed above the common central line. The other hand is that the price went down big time and then rally a little bit, okay? And then the common center is broken, and we have a candle that's closed below the bullish trend line. We have a setup. We must now apply the trading drill, the setup, the signal, and the low risk entry point. What I have noticed, ladies and gentlemen, a lot of traders can trade, but they don't follow the trading drill. All right. Sometimes I notice some traders, they start using the trading drill, then they ignore the economy news. So if that's you, try to slowly but gradually upgrade your trading skill by combining the technical and fundamental in order to play the mind game that is happening in this forex market. Going back to forex trading, the Euro USD, what's happening here? We know that the ECB, okay, the European Central Bank, the policy is to devalue, okay, the euro, okay? So money printing, quantitative easing going on in Eurozone, asset purchases going on in Eurozone. So the euro, as you can see, the policy, because of that policy, this is about the fundamentals, is going down. They want the euro to go down because of the currency war. That's another subject. But I don't want to dwell on that. So what's happening today? So we have now the euro went down big time and then rally. Now we have a bearish setup. Traders who noticed this setup were selling. So we are now at the key levels, okay? Pay attention because I don't want this video to be too long. So we are now at the key levels. The level I want you to pay attention to is 12511. So as long as it finds support above 12511, we may give it a chance, but be aware that it's still bearish because we are in a declining channel. It's still bearish. But if we receive a buy signal and we want to buy it, we need to buy it carefully above the 12511. Carefully, you see here, okay, the closing price, the opening price of these two candles equal, and also almost the low of the third candle here. It's a key level 12511. But I need to explain this to you. If you are buying the euro, it's a speculative buy because the policy is to devalue the euro. All right. So the best thing, if you want to sell, we want it to rally fast and then look for opportunity to sell. You remember, the smart money want to sell high and they want to buy low. So when we want to buy, when we want to sell, we want it to go up fast. If you want to buy, you want it to go down fast. That's why I'm saying to you, okay, priority to bullish signal above 12511. The short-term equilibrium price level for the Euro USD, the current short-term equilibrium price level for the Euro USD is 12695. So if it's going up a bit, okay. And it come near the level of 12695, which is the short-term equilibrium price level. Remember that level and be aware of it because that can be a resistance for the euro. But so far, it's at the support level, so priority to bullish signal above 12511. If it dip below that level, 12511, all right, ladies and gentlemen, we will look for opportunity to sell. How do we sell at the support level? It must be below the support level and come back and retest it. So you see here today, you see this week it went below it, but now it come back above it. So there are people buying here. This is due to the non-farm employment change. Some of the bears that were selling before decide to take profit before the economy news that is due tomorrow, the non-farm employment change at 1:30 p.m. So technically speaking, we are at the support level. So what I'm going to do now, I'm going to go to, I see a setup today on a 2-hour chart. Okay, here we are on a 2-hour chart. It's a very simple setup. Price display a double bottom and price close above, okay, the moving average 50. So we have a setup here, bullish setup here. On the edge of that support level, you see the support level, that's the green line here at 12511. But as I told you already, sometimes traders tend to forget. Do not forget that it is bearish. The euro is bearish for long term. So if somebody is buying now, one is trading against the long term and the medium term. So you want to be very careful and keep eyes on it and grab your profit when you think it's time to grab profit before the music has changed. So we have a double bottom in the support zone and the price closing above, okay, close above the moving average 50. This is a setup for a traders. A TSCW 24 trader may go to the first best time frame and take it gently at different stages, taking the signals. All right. But as you can see, if, for instance, ladies and gentlemen, let's draw a line. As I told you, we must draw a line. Suppose I draw, okay, let's draw it like this, okay. On the 2-hour chart here. here. So now it's above it, so it's a bit challenging to sell it now. But before that, it went down, so we can also draw a common central line here, okay, to create a kind of channel here and to monitor this bullish progression. All right, so know where you are and what is taking place. It makes sense. It is also a powerful. The price at a support level, the price can find a support or fail to find a support. If you find a support, it will remain above the support level, displaying higher lows and higher highs, and the price will definitely be in a rising channel. If it fails to find a support after going above the support level, it will come back down below the support level. But if it comes down below the support level, we will prefer that the price retest that support level to confirm it as a resistance level before we can look for opportunity to sell. As always, we want to use the trading drill, the setup, the signal, and the low risk entry point. So we see now, as I explained to you, we have a kind of bullish setup now on this 2 hours chart. We are at a support zone. What do we need to check? The economy news. Which economy news is due? So usually, trader will look at economy news for this particular day, which is the 6th of November. But I will tell you now, professionals do not do that. They don't only look at the day, the news that are due today. They will also check for the whole week and even for the week ahead. This is how one can control the risk and be ready, okay, for the next change of market sentiment. All right, it makes sense. So to summarize this video, what we are looking for a setup, and then we wait for the signal and a low risk entry point. We have seen, okay, that the euro is at a support level. We are seeing a bullish setup here, a bullish pattern here. Price display low and lowest low, followed by higher low. The price now above, okay, the moving average 50. I also explained to you on the weekly chart, okay, if the prior trend, okay, is very strong and we have a rally that does not go beyond the 61.8% or the 50% Fibonacci retracement zone, and the common central line is broken, and very important, very, very important, and the price close below, okay, the common central line, okay, this is, okay, a setup. We will, okay, now implement the trading drill without ignoring the economy news. For the bullish scenario, price must go up and then pull back, preferably not going beyond the 50% and the 61.8% zone, all right? And then the common central is broken, very, very important. And the fourth condition, okay, candle is closed. Now we have a setup. As you can see here, it's a bit messy, yes or no? So price rally up and candle closed, but still price went up fast before it come down. Be aware of it, okay? Be aware of it, draw your trend line, and be very, very patient. Trade on the edge. I want to check how long I've been talking to you now. I have another 2 minutes only, all right? If you look on this chart now, okay, the Euro USD on the weekly chart, there are some scenarios here. You see, price went down, okay, here, and then rally up. But if you see here, okay, it's not very strong. You see this move here, and then if you see this candle, it's quite strong, bullish candle here. If you see tall candle, strong bullish rally like this, be careful, okay, all right? So here, though you see the candle here, if we withdraw this, because this candle here is vertical, almost vertical, you see it's not easy to draw a common sense trend line. We will prefer at least 1 or 2 or 3 candles before we can draw the common sense trend line on the higher time frame before switching to the lower time frame. If one is TSTWSY008 trader, one can go to any higher time frame, implement this strategy, and then break it down, and then cream the market like a pro. This is about trading FX like a pro, tips and tricks. I hope you have learned something from this video also, all right? And we put into use, okay, to make excellent trading decisions. Until the next time, enjoy yourself and be very happy. We are the TSTW 24 traders. Speak to you soon.